Hi there, welcome to Kneppy Invest. Time for one of my favorite types of video, a technical update. So I will be looking at charts for 6 different companies, including 5 companies listed on the ASX and 1 company listed on the New York Stock Exchange. I'll be focusing on Zip in this video. And the reason I'll be focusing on Zip is we have seen a potential shift in sentiment for that company. And to be fair with you, for a lot of other buy now, pay later companies over the past few weeks. In fact, on the 26th of July, Zip share price rose 20% in one day. And I think Sezzle rose something like 40%. But in saying that, the share price of Zip has fallen from $9 from last June all the way down to less than 50 cents a few weeks ago. But the interesting thing about the rebound in share price for Zip and possibly some of the other buy now, pay later companies on the ASX is it is on higher volume. And that is intriguing because that's what you want to see when the share price rebounds and when you see a possible shift in sentiment. You want to see it on higher volume. And that is telling us the market is seeing something with Zip and other buy now, pay later companies right now. And the other 5 companies I'll be looking at in today's video include Flight Centre. Now, Flight Centre is interesting because this is a potential travel rebound story. And the share price of Flight Centre is at interesting levels in terms of where it sits in regards to support. Another interesting company is Codan. We have seen Codan's share price hit quite severely over the past year, but possibly a sentiment in that company is shifting around. So a possible buy just because of a shift in sentiment for that company. 2 other ASX companies include Neuren Pharmaceuticals and IPD Group. IPD Group is a recent listing, but the share price of that company just keeps on going up. So share price of IPD Group is at all-time highs, now fairly short sample size for that company. But IPD Group has released a couple of profit upgrades. And Neuren Pharmaceuticals, now that share price of that company is not an all-time high, but is at least a 10-year high. And we have seen increase in interest in Neuren Pharmaceuticals over the past few trading days. And the last company I'll be looking at is not listed on the ASX. It's listed on the New York Stock Exchange, and that is Johnson & Johnson. And to be frank with you, I've never really paid any attention to this company until the other day when I heard Johnson & Johnson being mentioned as a defensive stock. So I took a look at the chart, and the chart is absolutely fascinating. And I'll talk about why it's fascinating when it comes to Johnson & Johnson towards the end of this video. First company I'll look at is Zip, and really the focus of this video, and the main reason I wanted to do a technical update is because of Zip and the share price rebound over the past few weeks. Now, this is the daily chart for Zip going all the way back to the end of June last year when the share price was at $9. And then the share price of Zip moved into a downtrend a few months later and then really moved into that downtrend, or that downtrend was confirmed in October last year. And the share price just kept on falling from October all the way through to July this year. I have 3 moving averages here, the 100-day, 50-day, and the 20-day. And the 20-day moving average to Zip was a really strong resistance level. Every single time Zip share price hit the 20-day moving average since October last year, we saw the share price fall further from that. But that resistance level was broken a few weeks ago, and I'll show you the shorter term trend in the share price just to see where we have seen a bit of a rebound in the share price. The other thing we've seen with this rebound in the share price is it is on higher volume, and that's exactly what you want to see when the share price starts turning around. You want to see it on increasing volume or higher volume, and that is telling us there is participants in the market who are excited about this rebound in Zip's share price. And as we zoom on Zip's chart, this goes back to December of last year. You can just see the share price falling and stayed below that 20-day moving average all the way up until the start of July. And before the start of July, you can just see the share price starting to go sideways towards the end of June, sort of the middle and end of June, at around about 50 cents. I think the low in the share price was around about 45 or 46 cents. And then towards the middle of July, we started to see the share price just go above that 20-day moving average. In fact, there was 2 days where it stayed above that moving average. And then the next day, we saw a pop in the share price on higher volume, and that pop in the share price was, I think, a trigger for some traders coming in to take advantage of this change or possible change in sentiment. And the share price has really taken off after that pop in the share price around about the 21st of July, and the share price has risen all the way to $1. Now, $1 is not like a 6-month high. It's only really about a 2 to 3 month high. Last time we saw the share price this high was towards the end of May. So not a 6-month high, not a 9-month high, only a 2 to 3 month high. But this increasing in volume has got me interested in Zip. And I think what's happening with Zip and maybe other buy now, pay laters is traders are getting excited about the shift in sentiment, the short-term shift in sentiment, and that's what's leading to the share price rise in Zip and other companies in the buy now, pay later space. On to Flight Centre, and this is the weekly chart going all the way back to August of 2018, so almost a 4-year chart. And back in August 2018, share price of Flight Centre was almost $64. Now, you can see the effects of COVID-19 had on Flight Centre share price. If the share price dropped from the mid-30s all the way down to a low of $8, which would have been reached around about March 23rd of 2020. But since March 2020, share price of Flight Centre has gradually been rising, and there is actually a trend line then. You can, I portray that trend line as that sloping, solid, dark line. And every single time Flight Centre share price falls to that trend line, we do see Flight Centre rebound off it. And right now, Flight Centre share price is right on that trend line. It is struggling to stay above. So in the previous 2 years, whenever the share price hit the trend line, we saw an automatic rise in the share price each time. So 4 times it's hit that trend line. In fact, it might be 5 times it's hit that trend line, and almost immediately the following week we saw a rebound in the share price. We have not seen that now. So there is potential that this trend line could be breaking for Flight Centre over the following or upcoming weeks. But in saying that, the company did release a trading update the start of this week, so around about the 24th of July, 25th of July, and it was a positive trading update. Trading conditions are not as bad as the company expected, and I would have expected or thought the market would have taken this this news with a positive light, and the share price would have rebounded off this trend line, but that was not to be. So the market more than likely was expecting trading conditions to be better than expected, and I think conditions for this company, financial conditions for this company can only improve over the next few years. So wouldn't be surprised to see the share price rebound from here on in. Next company I want to look at is Codan. Now, the share price of Codan reached a high of something like $19, $20 almost a year ago or over a year ago. But the share price moved into this well-defined downtrend after the share price high and has continued up until recently. But it looks like the downtrend is coming to a completion if it hasn't already, and sentiment in this company is shifting. The share price low actually occurred around about June the 19th or 20th when the share price hit about $6.25. But on that day, the share price low, we saw high volume. So there were participants in the market who got excited by the share price of that company, and the share price for Codan from that low has just gone up. We've also seen a crossover in the shorter term moving averages, the 20-day and the 50-day, and the 20-day looks like it's crossing over the 100-day moving average. We've also seen a higher high, so it looks like potentially the share price of Codan is moving into an uptrend. So I put this on my potential buy list just because of the share price and volume action over the past month and a half. The next company I want to look at is IPD Group, ticker code IPG. IPD is taken by IPD, if I remember correctly. This is a newly listed company on the ASX. They listed towards the end of 2021. And a rule I have in regards to IPOs is I don't buy into those companies for at least 6 months. I want to see at least one financial results from the company unless the company releases a profit upgrade, and that's exactly what IPD Group did in February last year. They released a profit upgrade, and that's when I took a position, or just after that, I took a position in this company. There was a little bit of weakness in the share price in June, but then the company released another trading update about a month ago from when I'm doing this video on July the 27th, and the share price has continued to climb since that trading update, and the share price right now is at $1.92. Now, when the company listed, the share price was just above $1, so the valuation of this company has almost doubled from when they listed on the ASX. And this is exactly the thing you want to see for a company that's newly listed on the ASX. The majority of companies that do list actually fall in the first 9 months after they listed. So this is one of those rare companies whose share price has climbed and consistently climbed from IPO. The next company I will look at is Neuren Pharmaceuticals, and I am really bullish in regards to the future of this company. Don't look at the financial numbers because that doesn't tell you anything about Neuren Pharmaceuticals. You can see a massive rise in the share price around about the December 7th through December 10th. Share price actually rose from about $1.60 or $1.80 all the way to above $4 on news in regards to positive top-line results from their pivotal phase 3 trial in Rett syndrome, where they might get heaps of money. When I'm saying heaps of money, they have the potential to receive milestone payments of up to $455 million, and that's not including revenue from their royalties on net sales of their products. So the future is looking really bright for Neuren Pharmaceuticals, and the market is seeing that. Now, we saw that initial rise in share price in December last year, and the share price went sideways for about 8 months. But recently, we have seen the share price of Neuren Pharmaceuticals really take off. I'm not sure why. Hasn't been any major news flow from the company. The share price has risen from about $3.40 to above $5. And this is the reason why I just decided to take a position in this company and maintain that position without trading, because I'm not sure when the significant rise in share price will be, if it's going to be before any of these payments are going to be made or any of these further results or anything like that. I just wanted to maintain a position because the share price just could take off at any minute. And that's exactly what's done in the past few weeks. The last company I will look at is Johnson & Johnson. And the reason I wanted to look at this company was someone described Johnson & Johnson as the perfect defensive company. This company will not be harmed by any recession, and that is probably shown by this chart. This is the weekly chart for the company going back all the way to 2013. The share price just keeps on going up. Now, the share price has only risen from $84 to around about $180. So share price has just more than doubled over this 8 or 9 year period. But more than likely, there's been a lot of dividends in this as well. And because the share price keeps on rising, whenever you see a bit of weakness in the share price, like we saw during COVID-19, we also saw that during 2015, when the share price maybe moves below the 100-week moving average, that's the time to take a position in this company. So even though we have seen significant weakness in the markets, in the NASDAQ, S&P 500, the Dow Jones, over the past 6 to 9 months, we haven't seen that weakness in Johnson & Johnson just yet, if it happens at all. And that perfectly describes a really good defensive company. So put Johnson & Johnson onto your watch list, particularly if you are a bit nervous about any downturn in the markets, any downturn in the economies. Potentially, Johnson & Johnson is the company for you. That's all I have for this technical update, looking at Zip, 4 other ASX companies, and Johnson & Johnson. And to be honest with you, Zip's share price and volume action over the past few weeks is really intriguing. And so I'm going to be closely following Zip's share price action over the following few weeks just to see if this momentum can keep on going. The very fact that it is on pretty good volume is a good sign moving forward for Zip's shareholders, particularly those long-suffering shareholders who bought in at much higher share prices in the past. If you have any questions about Zip or any other companies I featured in today's video, just leave your comments, your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.